After a few days holding the $31 level, today Palantir is now back around the $30 level, around like $30.60. It wasn't surprising for anyone expecting a pullback, and to some degree it can even be a good thing. Right now, Palantir aims to clear off the last resistance ceiling of $35 from early 2021 and is currently taking a break from the recent bullish push. As one of the most iconic companies in the brave new world, Palantir has been keeping the market's hope up to offer a safe haven for anyone looking to risk their money. AI is not mankind's salvation from itself yet, but Palantir's shareholders certainly hope that their wallets may be saved by its hype. Hey everyone, I hope that you're having a great time and many profitable trades. In this video, we're going to talk about Palantir and see if it can make you a lot of money. As we know, over the past few years, the world has been changing. Companies that were once places to be for those wishing for gainful employment in exchange for expensive college debts have been reducing their staff size. And for anyone who have been involved or concerned or affected, it's been a traumatizing experience. Now, at the same time, we're having another issue in the sense that the sudden and sharp rise of inflation has been melting away people's savings in places that have only known deflation for many generations, tipping off the very precarious balance these economies have managed to safeguard. As painful as they may be, these shockwaves have also proven themselves to be useful because when the very fabric of our own reality fizzles away, we have to seize this opportunity to reforge a better future that is built differently for ourselves and by ourselves. And in order to do this, the most important thing to achieve is to improve our financial situation by spotting the growth opportunities of tomorrow. The market has been looking for the next big thing, and for many, they believe that Palantir is exactly what they're looking for. Over the past few years, it became much more significant than just another empty tech company begging for our money in exchange for promises. It is now a major player in the sector and tells us a lot about what the market appetite is at the time being regarding risk seeking, and if the tidal wave is ready to raise all ships. The company has enough reputation and prestige to trigger the market's curiosity as well as people's tendency to follow trends. It is a company that people would often view equally as the risk appetite of the market alongside others such as Tesla or Nvidia. Palantir's reactivity to the macroeconomic tidal waves makes it an interesting company to analyze and to perhaps invest in. In this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before this video continues, I just want to take a moment to thank each one of you for coming to my channel and hope that you will enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for more content about Palantir or other companies I cover. With that being said, I hope you can enjoy today's video, and let's get started. Earlier this week, Palantir first climbed to around like $31.48 and managed to maintain this gain for a few days before giving way to profit-taking temptations of the wider markets in general. The short-term resistance seems to be $32.50 reached on August 19th, and since then the share price stalled somewhat with a minor pullback of 3.24%. So far, that is probably more like a break than anything else. From what I see for the short term, it seems like the continued accumulation of upward potentials will still be there before the dam breaks around Palantir. The one element to watch out for would be the potential negative impact brought by the US elections and any negative sentiment that major events may trigger. So something that is going on right now is a lot of tech companies are having surprising price drops in the financial markets. Nvidia is one, Intel is another one. So as far as Intel is concerned, people have also been talking about like removing Intel from many boards or exchanges or ETFs because of this major drop. So at the moment, news articles around Palantir are still mostly positive, which kind of reinforces the general sentiment on what's currently going, and may give us like a tone of what's going to happen for the remainder of 2024 between the upcoming elections, the pressure from Wall Street to push the interest rates down, and a possible stars alignment for tech and crypto scenes. These things are, in my opinion, likely, but they're not certain. So there are also mentions of who backs up whom in the elections in terms of like of like the Palantir management, but that's probably just a question of good cop, bad cop to put eggs in both baskets. And in terms of US elections, there are only two baskets to begin with. The stock's price action has been able to hold itself above the $25 level while looking for consolidation and recovery. Lots of people are looking to find a decent entry point to make a comeback to the more exciting parts of the market, and when the Japanese market took a massive dive a few weeks ago, their wish has been granted by the fear of the paper hands. Due to the nature of its shareholder base, Palantir has always been a stock made of momentum and a large dose of anticipation and self-fulfilling prophecy, instead of cold, reasonable, or objective analysis of its financial ratios. Because just because its financial results are decent, it may not be enough to boost its current valuation, or at least not on the scale we wish for. We can see that its widening scope has grabbed the market's attention far more than anything else. The region with a lot of support levels has been identified at $25, above which the new goals to surpass are $35, providing a huge amount of stability to its price movement. These levels have served as important markers for investors, indicating potential areas of price reversals or continuation that have now been passed through. And the fact that they've been tested and successfully defended really shows that this company has a lot of resistance and support. The short-term trend for Palantir stock still appears to be bullish, with any pullback probably going to be recovered, and the previous decrease in both interest and volume from investors hasn't really changed the overall direction of the stock. And speaking of which, I would say that the volume of Palantir still appears to be very robust, circling around 50 millions per day, give or take. Now, the financial market is currently split in two. A lot of people want more security with like fixed income assets, and many others are now increasingly looking to the higher risk or high yield assets, for example, equities and tech stocks. Each side has valid reasons to be that way, but I would say that you would have to keep in mind that if your bank can give you 5, it's because they're making 7 almost risk-free or risk-adjusted, or they're making 15 risk-adjusted. So when we look at risk-adjusted returns, I would argue that equities, when things are unstable, when the inflation will eventually go down, like the equity side is probably more interesting for that reason, and for many others, but that's like the major one in my opinion. And from a longer term perspective, Palantir also has a very interesting price action pattern compared to its all-time high. Remember, 35 is a key level. We gotta see whether it can be surpassed, and if it can, then sky's the new limit. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position taking, the relationships with public sector actors, and its engagement of key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale is not enough to cover the operating expenses. If that were the case, it would be a sign of weakness from the company because it would mean that the company's own operations are not profitable enough to stand on its own 2 feet. For Palantir, that problem is also non-existent, because its cash flows have been positive for quite some month, mostly because its operations are profitable and it doesn't need to dilute its shareholders to keep the lights on. However, these numbers are not enough to push Palantir higher. The most important factor is the growth rate of revenue, especially from public sector. Like many other tech companies listed on a Nasdaq, people buying Palantir want to buy the powerhouse to become, not the decently profitable company that is. This would also explain the high multiplier that Palantir is currently enjoying compared to many other blue chips companies in more mature sectors. This is a double-edged sword for those who want to dabble in the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth does come from the public, Any additional partnership with healthcare, defense, or law enforcement departments may trigger massive upsides for its shares. On the flip side of the coin, every time an existing partnership ends or a scandal makes it to the headlines, Palantir shares may see a dip that could take a few days to come back from. These three measures are what define Palantir and may explain its dynamics in the market in general. It is an interesting company that people are putting a lot of hope into because its financial results are good and do suggest that Palantir has the potential that people claim it does. Because Palantir is a highly specialized and unique company that is praised for its technical expertise and noticed for its position taking by its management and shareholders, it's always been the center of a lot of interest, talks, and speculations from the market stakeholders, as well as the media outlets. Along with Nvidia and Tesla, it's probably one of the most talked about companies in the world, despite the fact that it has a much lower market cap than many other blue chips companies. Hardly any day goes by without an article to be written by major media outlets about how Palantir is doing, or where they believe it's going to land. The coverage can be relevant in two ways for our analysis. The articles can give us a feeling or a sense of what is the current market consensus about what happened and the mood that is the most likely to influence what's going to happen next. Their tone is often determined by the price action at that time and plays the role of current trends amplifiers rather than contrarians showcasing potential trend reversals. Even if it's not a crystal ball allowing you to see where the price is going to go next, it can always tell you what the current sentiment is, which may allow you to take a hint of what the next move may be. The second level of analysis is more basic, but also more useful. It is not about the content but the quantity of the coverage. Depending on the number of articles written about Palantir as well as who writes about it, we can have a rough estimate of how popular the company, the narrative, and the sector are in people's mind. Alongside the potential upsides, entire economies may benefit from this as part of trickle-down liquidity from risk-seeking capital. Ultimately, papers want to sell clicks, just like investors want to get alpha. If there are shining bubbles in the market, news outlets are usually very fast to pick them up, validating the overall direction of any subsequent bull runs. The number of articles currently indicates that the market is interested in what happens with Palantir, and the anticipation is a further increase in price when the interest rates begin to decrease and fall. We just have to be careful about the limit of analyzing news articles, as they tend to describe the direction the wind is currently blowing, but far less effective when it comes to predicting where things are going to go next. Now, obviously, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rates, and the existing stability. Palantir is a company operating in the data analytics subsector, which is a very promising place, lots of favorable talking points and potential vectors for future growth going forward. The world is getting more digital and analytical on a daily basis, as more and more business decisions will need data-driven information in order to make that call, as well as to optimize daily operations and locate the trends of the future. Palantir has been trading for a few years, but its existence dates back more than a decade ago, and its expertise does bring it head and shoulders above many of its rivals. It has deep relationships with deep-pocketed public sector departments in defense, law enforcement, and healthcare that we talked about, all of which require Palantir's digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or that it lives in a perfect world. The HQ move to Denver, along with the Davos speeches of its CEO Alex Karp, do suggest that Palantir is willing to take on the challenges of the future and that it's not afraid to say so out loud. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trends. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons for the stock to go from $15 to $30. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flows. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of the needs and doesn't have to beg investors for more cash injections in exchange of dilutions. With that being said, investing in Palantir also comes with a few unique downsides due to its company profile and the characters of the sector itself. Being a company that analyzes data for a living, Palantir will be more exposed to potential legal problems compared to other industries. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from the past scandals with social media, how Palantir acquires, processes, and safekeeps those data while serving its clients can be open to legal battles, which may cost the company its image, reputation, its bottom line, as well as future opportunities to get more contracts from government agencies, the same agencies that may require these data that were maybe used under inappropriate circumstances. It's a bit ironic, but that's probably the way it's gonna go. My theory is that since this is a touchy, delicate area of this economy, and no one wants to rock the boat, meaning no one wants to take on the blame if anything bad actually happens. In that case, it's possible that Palantir may take on the loss without having the capacity to shift any of the blame to other stakeholders. Because if they do that, they're going to rat on other people, and maybe they don't have the opportunity or the luxury of doing this. The other thing to consider is the potential decay of the narrative's value. AI and data analytics are very popular topics now. They're trending in the market, that's for sure. But what would happen if they stop being so popular once a newer sector has been created out of thin air or come back from disgrace? If we look at what happened with electric vehicles, we may see a similar drop in interest for data and AI, along with a potential drop in their market cap value for companies like Palantir. So, what these additional risk factors mean for anyone really looking into buying Palantir is that it is a blue chip sized tech stock with the volatility, or arguably with the volatility of a startup, mostly held by retails. Trading comes at a significant potential price volatility cost, and investing does require a fairly high tolerance of uncertainty. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and declined quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Now, having said all this, my opinion about Palantir is that it's a good stock. And in the long run, if you believe that AI and data analytics or big data are relevant, you should definitely buy it. Of course, in the light of the recent events, I would say that we may enjoy another wave of opportunities to buy Pltr while the stock price is on a pullback, which is good for anyone who wants to go long. This may last for a few weeks at most, or maybe like a little bit more than a month, in my opinion. Other than that, yes, of course, we can also face this possibility of going through a trend reversal. So it goes from like 35 to 20. It's always possible. Nothing is impossible. But at the end of the day, we play here with probabilities, right? So what would be the probability of Palantir going from like 35 to 25 or to 20? Or from 35 to 40. So this is why, in my opinion, I would say that between long Palantir or short Palantir, the long always takes advantage. One valid concern that we may have is the time now to start buying Palantir in large quantities? And my answer is no. Historically speaking, Palantir is considered to be very expensive, but that's historic consideration. If you look at what's going to happen in the upcoming few years, it's possible that Palantir reaches triple digits, right? Would it be still expensive by then? Maybe not. If we look at Nvidia, I mean, who could have really predicted that Nvidia took like the hyperbolic trend that it actually had, right? We cannot. So for this reason, I would say that Palantir is something that we got to be patient with so that we can trickle in very gently over time. I would say that if you believe in AI, if you believe in big data, if you believe that Uncle Sam is going to continue to have a significant influence in this whole ordeal, and that Palantir is one of those companies that doesn't always, scream about do no evil on any rooftops that they can get to, and to just collect the fees from the public contracts, then this would be a good stock for you. And my recommendation would be to buy it slowly in small batches over the next 12 to 18 months and give it a maximum allocation between 8 to 10% of your portfolio.